Hey guys, Yo's here. Today we're going to be going over the portfolio for the week. So to start off, to take a look at the market, honestly, mostly green as you can see. There's a few big tech names. You can see like Google and Nvidia that didn't do too hot. Something like Walmart also down about almost 9%. And then yeah, but mostly pretty good, I'd say. Even the semiconductor sector is kind of interesting. You can see it, both NVIDIA and AVGO are down, but AMD and Intel, for example, are up over 10%. So that's pretty interesting. But moving on into the actual performance for the week. So you can see here that we did come up top this week, up 2%. So that's about almost $1,400. You can see here we're at 33% of our target, and that's almost at $66,000. Now, some of that money that we added, not included in this number here, but some of the money that we added was the 3,500, and that was that happened on the sometime. Let's see, I want to say that happened, right here between these 2 days. I think on the end of this day it got added or something. So anyhow, besides that, um, yeah, you can see that we actually beat SPY for the week, up about 1% on SPY and about 0.87% on QQQ. You can see that 1 year we are up 40%, so that's pretty nice, and 90 days and 30 days as well. So greens across the board, which is super nice, obviously. If we go on to the individual level for each of the accounts, we can see something like Composer up 2.3%. We can see M1 Finance up 1.62%, and then we can see Webull up 21%. And that's kind of also indicative here on this chart. You can see this top dotted line is Webull. So, yeah. So, we are currently holding quite a bit in QQQs, or, essentially leveraged NASDAQ, and then a little bit of SPY, you can see. And then we're going to continue holding that, at least for now. Obviously, the ranges, I'd say, are pretty much in our favor to keep holding these. We're not going to be going back into UVXY hopefully anytime soon. You can see that the 10-day RSI for TQQQ is sitting at 69, so not close to that 79. Although obviously that can change in a few days, but you can see here we are in that green zone here. So moving on to the M1 Finance portfolio, I'm going to start selling some stuff probably this week now that we have finished that first full year of trading. So now we can get long-term capital gains instead of short-term for tax purposes. In terms of dividends, we actually didn't have any extra from last week. You can see all these are from the prior week. Going into the sector breakdown, we can see here that the highest sector in our portfolio was real estate. Biggest gain there was from AMT, which is very nice. Finally got a little bit of performance squeeze out of that because that's been red for pretty much the entire time. We have healthcare. Biggest gain in there was from Eli Lilly, up almost 6%. And then we have semiconductors. The biggest gain in there was from AMD still, which is crazy that we're still going up on that stock. I will touch base on that in a second. But technology, on the opposite side of things, didn't do too hot on Google, down almost 3.5%. We can see consumer discretionary down on Costco, and then last but not least, consumer staples. And the lowest gainer there was from Coca-Cola. Going into the holdings tab, we can see here that AMD continues to skyrocket. We're up at 258% in the last year. On that, Google is up 113%, AVGO up 58, 47 on Nvidia, 43, 38, 30, so on and so forth. So quite a lot. I'd say our average green position is probably sitting close to, probably close to like 30%, which is pretty crazy. And then on the red side of things, Actually, I want to find AMT here. You can see MT still down about 7%, but it's obviously a lot better than last week. And you can see on here, oh, I just realized, did I just do this all for the, yeah, okay. Going back to that, sorry. You can see Home Depot is still down quite a bit. Same with Visa and MasterCard, unfortunately, but it is what it is. These continue to go. So the plan, if we were to sell, is definitely start with AMD because that one is obviously the highest gainer. And then probably, honestly, quite a lot of these. I would say anything really that's above like, I'm probably going to run my script again to check their 52-week highs compared to our portfolio as well to make sure that we're hitting kind of the peaks. I know AMD is at its 52-week. It's at its all-time high. So that's going to happen pretty much guaranteed. I don't want to lose a lot of this. Not to say it's going to go down. It probably will go up. But the thing is, I'd rather be safe than sorry. Put this money into Composer. That is the plan. So, for example, we'd be able to put another $3,141 into Composer, into that strategy, and keep going up from there. Because you can kind of see here, the last 90 days, for example, this is a decent one, 13% up, whereas Composer's up 26%. I will say, though, it's actually beating, M1 Finance is beating Composer on the 30-day performance, which is pretty interesting. Probably a large percentage of that is because of the VXY trades that we've been trading in and out. Actually, it's technically VXX, but, the VIX products that I always mentioned, so. And then last but not least, on the Webull side of things, honestly, really great week for MSTZ. You can see here it's starting to rebound a little bit, but up 11.5%, up 2%, down 1%, up 1%, and then up almost 6%, which is super nice. Yeah, I would say, honestly, no changes, obviously, going forward. I'm still going to keep going to this strategy. Also, you saw that Composer got a facelift. And another really important thing for those listening that are in Composer or are interested in Composer is Composer actually just got acquired by SoFi. They haven't made any public communications yet, but they just were acquired by SoFi on the back end. There's some financial statements that have actually been, that are floating around the internet from, I think, they're probably required to list that. And I do think they are planning on doing an announcement pretty soon. But it is both worrying / exciting news. Kind of depends, obviously, on your outlook on SoFi. But I think it could be good for the platform because I know that the Composer team is very small, and that is something that they definitely need, which is people and resources, because they were they're essentially a startup. So that could go either way, like I said. Worst case scenario, I think this strategy in particular is honestly simple enough, and that's what I really suggest anyone that's looking to do contribute or to do strategies on Composer is to keep your strategy simple. And ours is simple enough to where I could probably either move to Quant Connect, which I know would be a lot more money every month, but it could be worth it, or at least probably in the meantime, I would probably settle for something custom, either that I could code, or honestly, at this stage, it's possible to do something with a simple strategy that something like Claude Code could help you with. The only issue is some of the data stuff can be a little bit tricky to navigate around. And yeah, so good news is we're very much early into this acquisition, so there's really no news that we know yet. Hopefully we do know in both a transparent way, and hopefully the platform just continues to be kind of what it is now. I think there were some talks between the CEO and of Composer and some other high valued members, and they kind of shared that the CEO kind of expressed something of the sorts of, at least for the first year, they're going to try to maintain everything as it is with no integration. And I think they're still kind of deciding on how that's going to look like a year from now, for example. But anyhow, the only thing I would change potentially would be, you can see something like here, year to date, this Blue Horizon fund's up, what is that? Almost 39%, whereas our fund would be up around 24%. So you can see there. Now, I will say that doesn't mean that this is worse or better. I did actually do an extended backtest. Let me pull that up. So the extended backtest for mine goes back to 2011, for example, and same with this. Now, the main reason there is it's capped by BTAL. There is actually a very easy way to do that to back to 2007. So I have verified it. The max drawdown does go up to 40%, I believe. The annual return goes down to about 100%, but it is still pretty stable, close to this. Anyhow, you can see this is ours going back to September 13th, 2011. Our annualized return is 120% with a max drawdown of about 32%. Now, this is QQQ as the benchmark, and you can see if I scroll down here and find max drawdown, it actually beats the max drawdown there. There's some years here. I think there's one year, for example, 2011, that the strategy gets beat by the benchmark here, as well as in 2022. Or I'm sorry. Yeah, I think this might be the only year that it actually beats us was 2011. And that's not just because we started later in the year. I believe 2011 is actually a pretty hard year for most of these strategies. Luckily, that's also, almost it's 15 years ago, so it's not like a completely same market as it is today. So, anyhow, you can see 120, 32 nearly, and then this is 100, nearly 120, just barely lower, but 30. And that is that golden, the Blue Horizon Fund, which is made up of more logic here. And this is the main reason I am actually not in it. I'm not against some of these. I just don't personally feel like I understand them enough to where I'm confident that they're going to be doing good every single day. These other ones that I have combined into Golden Lotus Fund also have been around much longer than the other ones, and they're technically like the OOS date, basically the last date that they were modified. If I take the oldest one, this just run this FTLT, it performs very much close to its OOS. And I can't really say the same thing about some of these, specifically this KMLM signal. And that's quite a big percentage of this total thing. So it's not something I'm entirely invested in. And the fact that it's so close here and they're actually very highly correlated, I don't really feel like it's worth it for me to actually adjust the strategy much at all. So that being said, it's definitely something that I always keep my eye out on, and this is one of the top performers in my opinion. You can squeeze out more annualized performance, hypothetically, but your risk exponentially goes up when you're doing that for almost any strategy I've seen that's actually successful. Something like Soxal growth, for example, if I try to pull that up here. Let's see here. I think it's like grow. Then I go over here and go to the OOS date. You can see Soxal growth. This one is up quite a bit since it's OOS. You can see here it's up. I think the chart's broken. There we go. It's up, 180 million since 2011. You can see this annualized return is quite high, but obviously that max drawdown is insane. So yeah, you can see how this has done. We actually have someone in the community that has been running this, and they did see this peak, and you can see here that it's nearly, it's only up 14% year to date, where it was up nearly 300%. So in my opinion, it's not worth running something like this. Yes, you get this insane performance, and if you can accurately time, when it's going to explode, then obviously that's great. But it's not that easy a lot of the time. So anyhow, guys, I believe that is it for me. And as always, I wish you guys well to the future.